Hello and good afternoon. My name is Matthew McCoro. We're here with our event on how to identify profit-making opportunities. We're going to be talking about a way to leverage a squeeze effect that combines trend pattern and momentum indicators, and then leveraging a specific order type, a way to set up your trade where we can be in front of market breakouts. That's where you get the automatic profit formula. So we're going to be talking about that in detail today. I like to think about these events as more of a workshop than a showcase event, where someone comes on and just shows a strategy, shows results. I like to dig deep and actually teach the concepts and actually work in the allotted time to really drill down and provide as much detailed training. So I highly encourage all types of questions, feedbacks throughout the event. I'm going to be spending the large majority of our time today on the live charts themselves and really less on, PowerPoint slides. But for some of those that have yet to meet me before, I'll go through a little bit more of my background in just a few minutes. But before we get too far down the line, I just want to stop and just do a quick audio and video check just to make sure everything's working properly with the technology. And then we'll start jumping into the heart of the workshop today. All right, so appreciate it, Kim. Kim's one of the moderators. She's giving me the thumbs up that sound is coming through on her end, but how about the rest of you? So at this point, if you can hear me clearly and see a slide in front of you that says sound check, go to the question section on your end and let me know that all is working. Give me a hello, give me a good afternoon, give me a hi, some indication that you're coming across, that I'm coming directly to you well. We got William T, good to see you again, buddy. We got Aggie, we got Rick, Suzanne, we got Jim. All right, perfect. So there's more of you coming in, and I do apologize if I didn't call out your name. I do want to stay on top of our schedule. So if we get good 20% of interaction, then I can assume the other 80% successfully is getting the transmission live. So do appreciate it all. Hey, Serge. Thank you, Raymond, as well, and the rest of the gang for being here today. We are at an exciting point of the market, and I'm excited that you all are here with us because we're on the verge of some really big things here that we've been tracking very closely. My trading group, we've got almost nearly 500 people that are logging in every week with us, following along with my analysis every week, and then of course following along with my trade picks. And we're really excited about what the next few weeks has in store for us. Now, I want to set the tone. We're going to be looking at two of the main concepts in the two most important pieces of trading. It's momentum, being able to quickly identify where momentum is and where it is not across the financial market, all the way down to individual symbols as we trade. And then we're going to combine that with direction. So to keep it simple, we're going to look for the direction. Is the market in a up trend, downtrend? And then we're going to say, okay, where is the money? We want to be at the right time where we've got a surge of momentum behind our trade. And that's what gives us the momentum. That's what gives us that breakout move on the charts. So that's what we're going to drill down to. Here's a recent example of what I'm describing in the form of an actual trade. So this is lift. This is the trade that set up for us a couple weeks ago. Actually hit the profit target yesterday, but on the screen, you're seeing a screenshot of the actual trade setup, and it started back here on this candle. So this candle switched the direction for lift, and where you see this entry order blue dashed line here, that was our identifying moment of time that we're on the verge of a breakout of price. So I'm going to be showing you exactly how to find yourself at this moment of time, which is at the point of the breakout. Now, in just a few weeks, lift broke out, starting at $12, rallied up to the $15.96 profit target that we set up in advance. well over a 20% stock price move in a few short days. Okay, that is the quintessential breakout pattern that I'm going to be walking you through today. Okay, so saw the screen was frozen, so let me know if you can see the chart now. I don't know why it got froze on us, but thanks for the feedback. All right, perfect. So everyone can see it now. Good. This moment of time, there's a distinct combination that brought this up into our purview. So what's interesting is I'm going to give you an actual formula that you can use to search the market for moments like this, for setups like this, both bullish and bearish. So it doesn't matter if it's a red market, green market, the formula is the same. It's just inverted, right? One's going to be looking for an up move, one will be looking for a down move. But what you're going to see, and I'm going to walk you through this in detail, I just like to give you an idea of what we're going to be learning, is that this moment here, this is a trend reversal point. Down here is our momentum. This is volume. This trend line down here on the volume indicator is our surge meter. Okay, it's a moving average. What we're looking for are a combination where we see a high volume condition. Okay, so this is a high volume day, almost double the average volume. We look up and we see a reversal. So the market switched directions from down to up with volume. That's what created this fast 20% move. And this is a repeatable pattern to go find. Okay, so we're going to get into that as I get to the charts, but I just wanted to take a moment just to get your head focused on what we're going to be looking at and looking for as we start getting into the market. Now, as I mentioned, we're going to be spending the large majority of our time in the charts themselves. I'm going to give you full visibility into the exact template that we use. But before we get in there, I do have to disclaim, this is a common disclaimer found in any event like this. Trading in the financial markets carries risk. You can lose your account, all of the money you have in your account. You can lose a trade, you can win, right? Everyone's goal, of course, is to be a winner at the end of the day. But I do have to disclose that there's risk in trading. So for me, I always like to just thinking about only trading or investing with risk capital. That means capital that if you risk it and you lose it, will not impact your daily life. You can still put food on the table. You can keep a roof over your head. All right, that's risk capital. Okay, so always go in knowing that there's a chance of loss. So if we can understand that and appreciate that, which I'm pretty confident that this group does appreciate, that this is a net sum game, which means winners get paid by the losers, losers pay the winners. Okay, I'm not talking about individuals. I'm talking about just the essence of winning trades, losing trades. All right, so my goal, of course, and I'm sure that's why you're here today, is to find a way to increase your success that you currently have, or you're trying to hit your first levels of success. Okay, but I do have to disclose that there's risk involved. Now, ultimately, I'm going to focus on simple and repeatable steps to trading. In fact, I'm going to be using the most commonly used, commonly known indicators as a charting template for us, and it's intentional. Though there are some phenomenal strategies out there that are highly complex that can take you months, if not years, to master. I come from a world of simple. A lot of the strategy here has developed over my 15 plus years based on my personal lifestyle, my personal schedule, and my personality traits that I'll disclose. Some of the personality traits that I have that are a benefit as well as a risk at times, just simply because I'm highly optimistic. So if you look at a scale of optimism versus pessimism, both extremes have pros and cons to it. So the strategy here that I teach and use on a daily basis is designed to get me balanced, is designed to push me back towards the middle so I'm not overly optimistic. So there's built-in patience, there's built-in objectivity to this process. So simple and repeatable. That's the end goal. You're going to hear me use those terms quite often. It's part of my soul at this point. And of course, the goal is to empower. That's why I think my sessions like today are different than what is commonly seen in the markets, right? I've been in this market for a very long time. I'll give you my background in a moment in more detail, but I've been around the block. I've created and been a part of hundreds of different products and services, from educational products to trading signal services to technology, as a consultant to help companies create software technology, ultimately to sell at a high level. But in my stage of my career now, I'm more focused on working with the many. So I have a focus on working with as many people as possible, and to do that in a manner that is easy to follow, right? So I'm going to be hoping to at least provide you one or two aha moments today. That's a minimum goal that I have. Now we're here to make money. I have yet to meet someone that joins an event like this that is not trying to make a return on their investment, right? So if you're investing in the financial markets, you want to get a positive return. And if you haven't yet traded, your goal is to get to that point where you're making money in the market, right? So before I jump into the live charts, many of you I recognize. I see active clients of mine in the room, so it's always a pleasure to have you all. You provide a lot of color to these workshops. And then I have those that have met me before or seen me in other events but haven't yet joined our club. And then I have those that are meeting me for the first time. So I've been in this market since 2007. I was actually hired to be a trading coach and mentor. So I started with a clean slate, had no direct trading experience before I was hired by a company that at the time was the largest financial education and trading technology company. They were primarily focused on trading currencies, the foreign exchange market. If you know that market or you've heard of it before, it is a highly technical market. So it requires a lot of technical analysis, a lot of chart reading skills and forecasting. That's where I earned my chops, was in a highly technical market. So I was paid to learn how to trade. Most of you, it's the opposite equation where you're paying to learn how to trade, be it buying direct education, newsletters, trading signal services, software, auto traders, things like that, or through the school of hard knocks, right? One way or another, we're going to pay to learn. So ultimately, and throughout my experience, I quickly grew a high level of passion and a high level of excitement around trading the financial markets, of course. But then I really grew a passion into coaching and teaching through that process. Now I was hired under the sales and marketing umbrella, and through my career, I moved up to become the chief revenue officer. So second in command, had over 100 plus team members that reported directly and indirectly through me on my organizational chart. That included obviously sales, marketing teams. It also included product team. So working with our company trading experts, building products from, once again, pure education, from basic all the way to highly complex strategies. I oversaw that process, made sure that we had all of the proper documentation, quality control in place. And then I was also responsible for customer service. So a huge benefit of access to find, what are the common issues that traders face? And we had thousands and thousands of clients from all walks of life. But as the title of that position resonates, I was the chief revenue officer. My main key performance indicator was, of course, driving revenue. One of the easiest ways to drive revenue was to always have new products on the horizon, always creating new product. I mean, in a given month, we'd have anywhere from 5 to 10 new products that we launched to our existing clients and then also to new traders. Over time, there's only so many products you can create. So with that added pressure at the same time in my personal life, I had a 3 and 4-year-old at the time. 2018, I decided to step away from both the pressure and the high stress environment of the second in command of this organization that was focused on driving revenue. And missing out on my children's lives, I decided to make a change in my career. So I took about 6 months off, but I had the itch, and I just built up such a strong passion and love for the financial markets, and more so helping people be successful to the fullest degree that I can assist. But if I had one of those moments, that clarifying moments personally, where I said, look, if I'm going to do this again, I'm going to do it a different way. I'm going to take my experiences, both positive and negative, and create a different environment of coaching, of supporting traders in accomplishing their goals. So one of the first things I did, I said, I want to find people that I have a great relationship with and have the same type of desire and same type of passion that I have to build a team to help create Concordia Financial Exchange. And lucky enough, I found a business partner that is tremendous. I've had a long-standing relationship with, and we started the basis of this company as well as this program that you're going to see today. With that, I made different decisions as a group. We've decided not to have huge overhead. We've tried to keep our costs as a business low so we can then pass on lower savings to you and not charge thousands and thousands of dollars for our services. And so you'll see that later down the road if you like what you see. But ultimately, what I'm excited about and what I really love about this process, it's been almost 5 years now, is that we have one main template that we use in the market. So we don't have to learn 20 different ways to trade. And so that's what you're going to see today. But I just wanted to give you a little bit of background about why I'm here with you today and some of the culmination of my career. But I also want you to know that I have tremendous experience and resources that can lower your overhead in every facet of your trading. So I'll tell you about that as we get going too. But at this point, let's jump over to the markets. I'm going to go pull up our charts, and we're going to start at this point. What I want to do is I want to build a custom list to walk through this process. I've got so many different watch lists that we use, but I don't want any level of pre-set up or preordained type of work with you today. Once again, I like this to be a workshop. So let's do this. At this point, type into that question section. Let me know your top one, maybe your top 2 stocks you want me to pull up. Give me your stock, give me the symbol. It'll make it fast. I want to create a custom list for us, and then we're going to use that list. So it's not mine, it's going to be your list. And I'm going to walk you through the strategy. So I'll get everything ready for us. Everyone go now to your question section and go ahead and type in a symbol, a request for us to break down today. Now, if you have more than one, that's fine. Just keep it to less than 3. And that way we can allow enough time for everyone to get their stock of choice up. All right, so I'm going to start building this out. Exciting here to see what Tesla has in store for us after the market, see how their earnings performance has been. That should do wonders for some of the other EV stocks out there, but we'll know that after the market. So of course I can appreciate why Tesla was is on the list. A couple people are requesting Tesla. We've got OGDX, I like that. We got pound dollar. Wow, we got a currency pair. I like it. The old currency pairs, Yeah, and that's what's unique about this process. The base template I use and my traders use, we use it across the board. It doesn't matter what symbol, doesn't matter what market, if it's futures, Forex, ETF, cryptocurrencies, if it's small cap, large cap, mega caps. It's one process. It's one template. Now, how we use it is going to be dependent upon how aggressive, conservative you want to be. If you like a little more action, there's counter trend trading opportunities. I don't personally trade Forex anymore. I don't have anything against the market. It's just, when to keep it simple, Forex is a macroeconomic market. So it's above just an earnings, right, of Apple, right, or Tesla that's coming out after the market. It is a larger type of market depth, meaning there's larger impacts to it that most of us don't have access to some of the data around the value of a currency versus another currency. So it sets up for, at times, some ceilings and some floors that we may not be aware of until after it happens. So it's, to me, it's not as advantageous of a marketplace unless you're, really on top of some of the macro effects. It's a great trending market though. So it is really strong in patterns, which is, to me, important to have a good pattern, symmetrical. But I have a lot of experience trading it. And we'll keep it here. We'll look at the pound dollar, since that's a request. Yeah, there's less expenses to get into. Yep. Yeah, so it's a lower cost. I mean, there's a lot of flexibility in the Forex market, flexibility of investment size. When I started in the Forex market back in 2007, we had 200 to 1 leverage in the United States still, 200 to 1. So, $500 would control $2,000, $200 or $100,000, excuse me. So a standard lot. Nowadays, it's, after the Dodd-Frank Act, it's capped at 50 to 1. Yeah, so it's definitely changed since the recession 07, 08, 09. All right, so I want to just walk through this template. Now, you're going to see moving averages here. If you know what they are, fantastic. I have a specific combination of how we use these. Okay, this is the start. Remember, we're talking about the end goal in mind. This is a list of your requests. Now, there may be a handful of these that are ready to be bought. They're in a buying position right now, but odds are probably not, and I'll explain why. This is your list. There's a total of 18, symbols that have popped in here that you all put in, and I'm going to use them to walk through the most important concepts of identifying breakouts. Okay. Now, there's 3 trend lines here. These are moving averages. Like I said, my goal is to make this simple. My goal is also to develop a program that does not require you to have expensive charting software to use. Now, this is TradingView. This is my software of choice, and the reason I just have tons of experience. I've used it for many, many years at this point. And a lot of my traders that follow my programs, they also use this because we have congruency, of course, but you are not required to. These are not what I'm going to walk you through today. Nothing is proprietary to TradingView. The reason, once again, I've kept the most commonly used indicators is so you can use them on any software of your choice, from others, free software like bar charts, stock charts. I have the lowest paid version here to give an idea of TradingView, which is the pro version, pro plan, which is $14.95 a month. For about a year and a half, I used the free account, the free version, to drive all of the trading. The only reason I upgraded to the paid plan is so I can have unlimited watch lists. That's the only reason. So if you're not really too worried about having a watch list, then you can literally run the strategy today on the free version. You can use this on your broker's charts if you've got Thinkorswim like TD Ameritrade like I have, or you have Charles Schwab, Fidelity, Tastyworks, Interactive Brokers, whoever you trade with, if they have charts, you can run this exact setup with. Nothing is proprietary. Now, the combination I use is very specific. We have a 10-day, a 20-day, 50-day. Now, for the majority of the time today, we're going to be just looking at the most simple reversal, which is using the 50-day. But I show you the full template because, once again, I told you I was going to show you the entire setup, and I want to be a man of my word and do exactly what I said I was going to do. Now, how we use the smaller time frames is relevant. We use them every single day, but let's first start breaking down the first piece of identifying breakouts is to get which way are we going to anticipate the breakout, right? Which is the direction. Okay, so direction, in my experience, and maybe your experience, getting the direction right is the number one issue that retail traders face, is anticipating or forecasting properly. Is the market about to go up or is it going to go down? That's the first thing that we need to have, a consistent and reliable method. And it's got to be fast, it's got to be efficient. So that's why I use these moving averages. Now, if you want to use exponential moving averages or weighted moving averages, you can do that. I'm just going to use the simple one. And this is what I use all the time, but you can adapt it. The combination of a 10, 20, 50 is very specific. What I'm going to do is I'm just going to hide the other two, the 10 and 20, and I'm going to take off the volume, which is the fourth main indicator that we have on our charts. The simple way, for those that are not familiar with moving averages, or maybe you may have heard it explained in the way I'm going to explain it. If you are familiar with them, give me a few minutes just to explain to the rest of the room what they are, how we read them, how we build the relationship of them, and then we'll jump into how we put it together. Okay, so if you already know what moving averages are, just relax for a few minutes, and then we'll hit the ground running with everyone on the same page. Now, these moving averages are replacing the need or the required skill of manually drawing trend lines. Now, drawing is an art. Art is subjective, okay? My goal is to be as objective as possible, is to not have to make opinion-based decisions, emotional decisions. Once again, this is another step to help overcome some of my optimism. I want to try to balance my optimism. So instead of leaving a decision up to how I feel about something or how someone else feels about something, I want to build something that's objective, that's data-driven. So we're going to start with a 50-day, and that's going to be considered our longer-term trend line. The longer-term trend line for us is about 2.5 months worth of data. I'm on a daily chart, and this is 90% of my trades happen on a daily chart. I'll explain in more detail why that is, but the reason I bring that up now is because each one of these bars, right, has data, has open, high, low, and close prices. Like today, for example, we have an open price, a high price, a low price, and a close price. Now we still have a couple hours left till the market closes, but this is the data we have. So what this 50 moving average does is it goes back and gives me the 50-day average price of Dollar General. So when I pull up the chart now and I see Dollar General trading at $237.33, and I look to the 50-day average, it's been $245. So we are currently trading below the 50-day average price. So the trend is down, the price is lower, that is a downtrend. When we're above it, like when we shifted over here back in October, where we closed at $244.98, the 50-day was $243. We flipped from being trending down to trending up on price. We flipped from a downward price move where price is below the 50-day, and then we flipped it up, okay? This moment of the reversal is where we will find the biggest percentage moves in the market take place. The point of reversal, that's the Dollar General. We can go to Luminar Tech. Reversal. What I want to do now, I'm just going to introduce another simple indicator to help visually show this. I just turned on what's called fractals. So what fractals do is they provide a simple way to identify highs and lows in the market. Highs and lows in the market. So if I zoom out here, these are not sell or buy, arrows, okay? A defined high, defined low. It's very important to know this. If I would break down the most important things about looking at a chart, number one, it's obviously trend. So understanding trend patterns. Number two, it's simple highs and lows, because that gives us support and resistance, okay? Those are the two most important things when looking at a chart, okay? Where's the directional move? And then, okay, where are we hitting highs and lows? Very important. And it's public common domain definitions. So to get a high, you need two highs to the left lower. You need two highs to the right lower. Okay, that is a fractal high. So I just use this just to visually help people see highs and lows. Without it, you literally have to be going, okay, two to the right, okay, that's a high. Oh, that's not a high. Oh, there's a high, right? You'd have to visually go through it. But I want to make this, once again, very simple and quick. I got questions coming in. I'll answer them in a moment. I see the questions. So think about the move, and I want you just to visually see. This is the reversal point, right? You see this reversal, and then we saw this extension down. This is a down move. This is Luminar Tech. From this high to the next low, price fell 41%. Now, the next high to low here, fell 25%. Now, this is a sub $10 stock, okay? So the percentages are going to look a lot bigger. We'll do it on a larger stock in a second, too. Let's go to the opposite move. So let's talk about a bullish reversal point here, this surge up on this side. So from this low to this high, look at this surge in the market. From low, okay, to next high above the 50-day. That's an 88% surge. Let's go back to this down move. The reason I'm showing you this is because this moment of time, the reversal point, will give us historically the highest percentage price move, the first reversal point, the one that kickstarts the reversal. So if we go to Tesla, now Tesla is trending below the 50-day moving average. It's still in a downtrend. So that's why we want to, I keep this here as I teach this, because this becomes your big deciding fulcrum. Are we trending up or down? Okay, it's our longer term trend line here. Now there are longer, okay? You have a 100 that's commonly used. You have a 200-day, okay? Now the reason I have this 10, 20, 50-day combination is based upon my desired length of trade. See, this pattern at 10, 20, 50 will get me in trades on average from start to finish, from entry to profit target, an average of 3 weeks or less. So some trades take a few days. Some of my trades may take 30 days. But on average, it's 20 days, 20 and a half days. That's a swing trade. So this setup is designed for swing trading, being in a trade for days and weeks. If you are more of a short-term trader, a scalper, an intraday trader, a pattern day trader, then your trading will be hours and days. Longer term trading, the other side of the spectrum, investors, right? You're looking at weeks and months in positions, right? To me, I have a specific pattern for longer term trading. But this is what we use about 90% of the time, because the majority of my trading is around options. So with the options trading that we do as a group, is we're looking for an expiration month, the closest expiration month. So we want to have a shorter type of swing to our pattern, okay? Because if I introduce the 10 and 20 to Tesla for a moment, you see we're trending below the 50-day. So the overarching heavy weight of the trend is bearish. But you can see starting here on the 9th of January, we started to change the short-term direction. So the 10 days your inner trend line. Okay, that's the closest trend line that we have to the price. It's only 10 days worth of data. So it moves up and down more frequently, has more volatility because it's less data. It's only 10 days. So it acts as our initial data point, right? It's our initial understanding of what's about to happen next. It's short term, it's only 10 days. And then the 20 is in the middle, and that becomes a second layer of confirmation on what's happening. So all the way starting back here on Tesla, starting back here in September, when we reverse down from being above that 50 to back down below it, that's the point of reversal. So where we are right now, we're still below the 50-day. So the heavy weight is still down. But you'll see that we're making higher highs here recently. Okay, that is the retracement. Okay, that's the counter trend move, because the market doesn't go in a straight line, doesn't go straight down, doesn't go straight up. So how we use the smaller time frames is it gives us an idea that we are going to retrace. Now, I don't want to get too advanced or too far ahead because I easily can. The key and where traders get lost in direction is due to sequencing. We have to train our eyes to see things in sequence. So if you remember, the larger number here, the larger moving average carries the most weight. Now we have a strategy that I teach and that we send trades around, this counter trend move here. Okay, so it's tradable, but it is more aggressive because it's a counter trend trade. So there's opportunities to use this strategy in more of an aggressive sense. This is what we call a snap up pattern. So it snaps up, and that's what it's doing now. We talked about Tesla snapping up over the last few weeks, so this is not new to us. But the overarching direction is still bearish, and it's going to be bearish, not until I feel like it's not until Elon Musk says it's so. It's when we have a reversal where we start trading above this 50-day average. That's going to be the reversal point. We're not quite there yet. So I just want to highlight that, because though the price has gone up, it has still not come up and above. And it happens quite frequently, right? Look at all these up moves towards the 50. It never reversed. Yeah, earnings this afternoon, after market. Post-market earnings. Yeah, post-market. Yep, so after the market. So now, just by using a simple setup, BOE, it's an uptrend. Iovance, biotech. It's now an uptrend. It's now an uptrend. We're trending below, now we're above it. Okay, this started on Monday. Magna getting back above that 50-day. 3M downtrend. FRT uptrend. JP Morgan uptrend. GDX uptrend. Pound dollar uptrend. Okay. Burlington uptrend. Boeing uptrend. Amazon uptrend. Intel uptrend. Devon Energy, it's a downtrend. It went down below the 50-day. Bank of America. Bank of America is setting up for a trade here. Bank of America has just gone its second time above the 50-day. That's a secondary move. And then you have Verizon uptrend. Okay, so very quickly, we can pull up charts. Okay, what's the overarching, what's the high level direction? Let's go back to Dollar General. Now, if you could find yourself at this point in time, at these reversal points, actually, let's do a circle. If you could pull up a list of stocks whenever you wanted to trade that were at this moment of time, directionally trade on the right side. So knowing when there's a reversal down, you're going to be either selling it or trading a put, buying a put, right? Whatever directional strategy you like to use. If you're at these moments of time where I've circled here, just look at what's happened after, and this is a stock of your choice. Do you think you could increase the amount of profit on these trades, right? That's what I'm going to give you the final piece. The real big, powerful mover here is momentum. Now I'm going to turn on volume. That's the indicator down here below. I'm going to make this a little bigger so I can stretch it for you. All right. This is a volume indicator. It just simply gives us think of it as a log, a transaction log. So, for my CPAs, accountants in the room, right? You're going through the books, you're going through the financials of a company, you're going to take all their expenses, you're going to take the income, right? Well, this is the transaction side. This is what happened. So, for example, today on Dollar General, you see the data here, okay, in this left box where my cursor is. So today so far, there's been 823,000 shares traded for Dollar General. Well, a number by itself is really hard to walk away with actionable intel. I want to compare today versus a number. Well, I'm going to use an average. I'm going to use a 20-day average, in fact. So the number to the right is 1.897 million. That has been the 20-day daily average number of shares traded. That's the average. So right now we're trading at less than half of that. Based on where we're at in the day, we're not going to have enough juice for Dollar General to get to the trading average. So just like we talked about on top, we talk about where a relationship is between where the price is compared to, I closed out one of my indicators. So there we go. So just like we talk about trend, we're comparing it to something, same thing with a volume. Now going back to what I circled here. The vertical alignment. The vertical alignment is what we are looking for. So I want to see a pattern reversal. And I want to look down below and see volume at a high level. That is the combination that will put you in a high percentage breakout scenario. Remember, without volume, without buying and selling, the markets don't move. Why does the price not move on Saturday? Because there's no transactions. Yeah, the market's closed, but there's no transactions. If there's more buyers and sellers, price goes up. More sellers and buyers, price goes down. However, when there's a lot more buying than normal, price goes up fast. That is an inarguable fact about how the markets work. I have yet to come across, after doing hundreds of these events, someone come up with any type of contrary argument to how price moves fast. It is based upon a surge of activity, both ways, up or down, bearish or bullish. So when you look and see this run, this is back in March, right, for Dollar General. It started here. Didn't start there, didn't start here, didn't start here. It started at this moment of time. So when I look down, I would use the back in time machine and move right to the day of the flip. We had a surge, 2.7, almost 2.8 million shares traded on Dollar General for the day, and the average was 2 million. So a massive increase of activity that aligned with a reversal above it. That is the recipe for an upcoming breakout. Obviously, we know what happened, right? It broke out and it rallied and it pushed and it ran. That is an extension post reversal. See, same thing over here on the bearish move. We had a increase of activity, big bear bar at a reversal point. Look at the sell-off that occurred. Now, it's not Dollar General. It's not a Dollar General specific move. It is a market-wide event that takes place. It's a symbol agnostic. Doesn't matter what type of symbol you're looking at. If we can track volume, if you can track pattern, you'll see this show up over and over again. Here's a reversal point. Look down below. Were we above the average volume? Yes. If you missed that trade, there's another opportunity that's set up again a few days later. Same thing on ups and downs. Let's go to Tesla. This moment in time, that was the sell moment. We flipped direction. You look down, you got bearish volume. If you missed that one, you would have found this one a few days later. What do you think we're going to look for here? Right? My group, we're looking for that first bullish bar surge above this 50, and we're going to be buying. We're not there yet. So any chart of your choice. Let's go to Bank of America. The only thing missing on Bank of America right now for a buy is what? What do you think we're missing on Bank of America to be a buy? Like a right now buy. I've only showed you just a few examples. I'm going to keep showing them to you because it's really powerful and it's objective. And it's an objective process. There's nothing opinion based. That's right. Serge nailed it. Devendra nailed it. Volume. That is confirmation. Just remember, the way I like to think about this is the old saying, you can walk the talk. You can talk the talk, you can walk the talk, right? Talking the talk, right, means you just have an opinion. There's a lot of that out there, right? It's people say, oh, why should we sell Tesla ahead of earnings? And then you'll see another opinion, why we should buy Tesla ahead of earnings, right? I mean, it's opinions. Someone's going to be right, but it's an opinion. But the actual transaction is walking the talk. It's no longer talk, you've actually invested. Money has come across. Now, it's not just retail money, right? This picks up institutional money. This also picks up hedge fund money if it's done in the in the initial primary market. There is a secondary market. There's also dark pools where they're outside of the normal exchange, right? So think about it. We don't want to be alone. There's an old saying when it comes to business, right? Let's say you want to start a new business. You don't want to be the first one, right? You don't want to be the last to open that business. You don't want to be first. You don't want to be last. Same thing in trading. You don't want to be the first in, and you don't want to be the last in a position. If you're first, you may be too early. You don't have enough momentum to keep that price going in your direction. So you don't want to be first. We don't want to be too early. We don't want to be too slow either, because at that point, we're going to be buying so late into a trend, we're probably going to run into the end of the trend, right? So the goal is to be just right. We want to be timing it at the right moment where we have momentum and we could take advantage of the biggest movement on the horizon. So Bank of America is very close. It started here. This is the initial. This is the retracement. It's setting up for a secondary move. Okay, a secondary reversal move. It's a little advanced if you're new to this, but that is what we really love, the second move, because you have the first, you deal with the retracement, it always comes, and then you get that second move. That second move here is a big move. That would take us, that would put Bank of America challenging 37, 38, even up to this 38.50 level. But we need to see it happen first. So the volume is the ultimate confirmation that there is a conviction. You are not alone in the bullish forecast, because we're going to see activity show up below. So it's not ready yet. Go to Verizon. This is earnings, but there was a lot of stocks yesterday, if you noticed, that in the first 5 minutes had a limit up, limit down trigger. There was about a dozen that I saw. So there was some erratic trading in the first 5 minutes yesterday. Several in semiconductors. So it's very odd, but you know, good thing they shut them down when they have these abnormal spikes. Just look up LULD. If you Google that, it's called limit up, limit down. It's a throttle that's built in based upon percentage moves. They'll pause. They'll actually pause trading because most of the times it's usually some type of bot or some type of algorithmic issue that hit the market. So they shut down symbols or even the overall market, right? It just depends on how vast the issue is. So that's why some bars look wacky. At any point in time, what we're looking for, and the way I describe this, is two distinctly different hats on. There's a new trade hat. Okay, I'm looking for a new position. I want to get into the market on a new trade today. That's a certain type of use of the strategy I'm showing you. The other mindset is I'm in an active trade. I'm analyzing. I want to see what is happening in a trade, or maybe I'm looking at the S&P 500. Maybe I'm looking at the NASDAQ to get a sense of what's happening in a specific industry, right? So I'm going to analyze what type of trend we're in and when to anticipate the end of a trend. So really two distinctly different hats. This list I asked of you here on the right, from Dollar General, Tesla, you know, the list here I'm pointing at, that is your list that I've been analyzing and walking through. But if I want to find a new trade, I've got to find trades or stocks that are at this point. Without a full week with me live, seeing this play out over and over again, type in a yes if the concept makes sense to you so far, that the reversal point can give us the biggest percentage move. Is there at least a fair acknowledgement that we can see just on the few charts I've shown that there are substantially large moves at the reversal point? Just type in yes if that's a fair statement so far. I don't expect you to be 100% believer yet, but is it at least a fair statement to say that we have seen that on just a handful I've shown so far? Okay, good. So ultimately, if I can build a list of stocks that are at these reversal points automatically with a few clicks of a mouse. So instead of me just hunting and pecking through 7,000 common stocks, because that's how many there are, there's over 7,000 of them, we can get a specific list of stocks in a particular pattern. So because these are all objectively generated, there's nothing subjective here on the analysis so far. So what we've done is we've created filters, scanning filters, to search the market on our behalf, to search the market for us. So when I want to trade, like I do every night, I simply pull up my charts and I start looking at all of the various results of my search criteria. That's all I do. Good question on delta. The large majority of deltas are in the money, so 65-75 delta is the majority of my signals. And I'm going to show you the checklist so you can see exactly how we pick them. In the money. So what I've run here is what's known as the aggressive bullish breakout. So this is a strategy to find bullish breakouts, aggressive patterns. Okay, that's what this is for. That's what this specific criteria is in this list. So ultimately, I've got all of these filters. Each one of these filters gives me the criteria. They have to be small caps or higher. I'm not dealing with over-the-counter stuff. I'm dealing with common stocks that are at least have a market capitalization of 200 million or more. They've got volume greater than 1 million shares. They average over 1 million shares. So these are liquid stocks. I want a positive change price, and I want to have the price crossing up on the simple moving average 50. Okay, this is the reversal. So to cross up, that means we were down, right? So I'm trying to find that initial crossing point. Now I use relative volume, but I've turned it off because we're in the live market right now. Relative volume calculates the last day, the last period, closed period, which is not today. Today's open. So I've taken it off just to show you the list because the day's not over yet. We don't have the full list until the market closes. So there's 13 matches. You can see that here, 13 matches. Start off with over 7,000 to choose from. All 13 of these in the list, there's Bank of America, match up and have the filters checked off. This is McDonald's. Remember I told you yesterday they had those wacky opens for some stocks? That had one, first 5 minutes of the day. But we're crossing up. This is another, McDonald's is set to break out too. This is the checklist. I got great questions coming in. I'm going to show it to you so you have all the options set up. So what I just ran here to get this list of 13 is using this checklist. This is the aggressive bullish checklist. So at this point, I'm going to zoom out a second. I want you all to take a screenshot. Like I said, I'm going to give you this screenshot today, give you this checklist. So you can take a screenshot using GoToWebinar. All you have to do is exit full screen. If you're in full screen of the viewing window of GoToWebinar, go to the top right of the box. You'll see those double stacked squares, right? Just like a normal minimize window. Hit that, you'll exit full screen. Don't hit the X or you'll leave the webinar. Don't do that. Once you minimize the window from full screen, you'll see a camera button show up in the top of your toolbar of GoToWebinar. Click the camera button and you'll take a screenshot. So to take a screenshot here, I can also drop a link. It's going to be a long link. You can click the link. So there's a link. I think that's a link. It may be too long of a link. Wow, that was a super long link. All right, well, it worked. So let me just copy and paste that link I dropped in. Now I'm going to zoom back in. Okay, so let me show you this. I got questions on what expiration. It'll be answered right here. Okay. So as I zoom in here, you'll see the filter settings. Now they answer the key questions and the key criteria for the process here. This is what we get. Volume here gives me liquidity. This is the daily volume, has to be at least 1 million shares. I don't trade anything less than 1 million shares a day. Average volume. This is also liquidity. I don't want to just see it today. I want to make sure that they have a history of volume over 1 million shares. That's the bare minimum. Okay, so to liquidity. Then I have momentum. Relative volume gives us momentum. This is telling TradingView or any scanner that I want to find stocks that traded above their average. That's what this one means. It's a factor. So if I average 2 million shares a day and I traded 2 million shares today, that means it's a 1. 2 divided by 2 is 1. It's a factor. If I traded at 4 million shares and the average was 2 million, this would be a 2. Okay, that's 2 times. It's a factor. That's momentum. So we're looking only for volume above normal. Change percentage means we want to see a positive bar. That gives us pattern. And then we also have the last or the price crossing up on breaking the 50-day moving average. Okay, so we've got liquidity, pattern with momentum. So once again, this is not proprietary to TradingView. You can use this on any scanner of your choice. You can use this in Thinkorswim if you want. So once we hit the button, we'll get a list of stocks that check all of these boxes. It's the only way they show up. Now down below is the trading setup. So this walks you through how to set up. You set your entry 1 tick above the bar high. You set your profit targets using previous highs. You set your stop loss. If you don't know how to do this, we have lessons on it. So don't worry if you're not familiar with how to do this. I've got lessons on how to find profit targets, how to identify the best ones. I've got multiple different ways to set a stop loss. Every trade has a stop loss. Down here, if you want to trade the option, is the criteria we use to select the option chain. You see what's different about this is we're looking at the underlying stock. Everything is based on finding stocks poised to break out. Once we identify that, then if we want to trade an option, all the work's done. All we have to do now is choose which option to trade. That's it. I already know where I'm getting in, when I'm going to buy the option. I know when I'm going to get out of the option because I have a profit target and I have a stop loss already. So the uniqueness of the entry order, the ticket on the setup, is that we have an entry order plus 2 sell orders for every buy order. Every new buy, we've got 2 sells, all done at the same time, all in advance of us being in the trade. The simple reason why options are a derivative of the underlying stock it's associated with. So if the stock goes up, the premium will go up. If I'm going to buy, right? If I buy a call, for example, stock goes up, price goes up, my premium goes up. Well, premium goes down, or stock price goes down, my premium goes down. Okay, that's what derivative means. It's tied to, right? Extremely simple and straightforward, and that's the goal. We start from the top and work our way down. So when we come to lift, I'm going to show you the entry style. Let's go back. It's just a recent trade. I want you to look up and down the line here. And I'm going to pull up the checklist next to it. So here's the criteria of the trade. Let's see if it answered it and see if it hit the criteria. Okay, so the first thing is, do we have the price crossing up on the 50-day? Yeah, we do. Does this average more than 1 million shares? Yeah, it does. It averages 12 million shares a day. Okay. Did it trade over 1 million shares? It did, right? Of course it did. Right? 11 million, almost 12 million. So check the box. Positive day? Yep, we had a positive day. So you can see that the entry, let's talk about the setup. So the high of the day was $12.01. That was on Friday. I send out signals the night before the trading day. So Sunday nights for Monday, Monday night for Tuesday, Tuesday night for Wednesday. Daily trades only good for the day, the setups. Remember, the keyword is set up. You see, I sent this out Sunday night in advance of the market opening on Monday because I want to catch the breakout. I don't want to chase it. So we trade when the market's closed. We set up trades when the market's closed in advance of the next day. So that way we have 12 to 14 hours to have plenty of time to set up our trades and be done with them. So 1 tick above bar high, that's our trigger point. So it's a pending entry. I'm going to show you what it looks like here, the actual signal itself and the actual delivery of the data, not only to show what the signals look like. So if you're interested in getting my picks, you'll see what it looks like, but more so what you'll be trading and how you'll be setting up your trades, taking advantage of the strategy. The next thing we did is we had a stop loss, and then we have our profit target. So we already know going into it where we're going to get in, if we get in, how to manage the risk in the form of our stop loss so we can cut any losses if we are wrong. We want to limit it. Every trade always has a stop loss. So this was the signal sent out. This is the actual email that was sent out on the 8th. So this is January 8th. You see the charts, right? This is Friday. So we sent this out on Sunday night. The symbol lift, we're going to buy the long call. You're going to select the February expiration. Strike price is $10. If you want to use a limit, it's up to you. You can set a limit on the premium, $2.76. Stock trigger, your go moment is $12.02. When lift hits, if lift hits 1202 or higher, you're going to buy the option. If that happens, you're then going to have your profit target and stop loss set up. Now, you can do it manually. It's not as powerful if you do it manually. Best way to do it is to use a pending entry order where everything is done at one time. This is what it looks like. Now, I use Thinkorswim, but this setup process is not exclusive to Thinkorswim. It's not proprietary by any means. So I have clients all over the world that use all different brokers, and they follow the same strategy as I'm showing here. So this order here, okay, I'm going to show this. This ticket looks like this when it's executed. This is when you're done, it looks like this. I'm going to pull up the actual trade ticket from that night. See the date in the top left corner, January 8th at 20 hours and 17 minutes. This is 24-hour time. So that means 8:15, 8:17 at night. This is the ticket below. So remember, I send this out. I send out this email. I also send this out via text message too. So my traders take this in 5 minutes or less. They take this and then they put into their accounts, and it looks like this. This is the actual ticket. You see there's 3 orders in one ticket. So the first that's green, it's labeled green, is the buy order. So this is the buy order side. So we're going to buy 2 contracts of lift, 17th February expiration, $10 strike, limit of $2.76. Okay. On the condition, see, this is a conditional order. On the condition that lift marks at or above $12.02. Now, if this happens, okay, this must happen. This must be met, this criteria. If that triggers the next day, this is Sunday again, the 8th. We're talking about Monday, the 9th. Then I've got 2 OCO brackets. I've got one cancels the other bracket to manage both sides of the trade. So the second order is the closing order on the condition that lift marks at or below $10.32. That's the stop loss. The third order condition is that if lift marks at or above $15.96, then sell those 2 contracts. Everything is done up front. The entire details of the trade is managed based on what was sent out. This is the autopilot. I set up my flight, set up the GPS, I sit back and let the market do what it's going to do. That's what, if you don't know how to do this, I have lessons on this. You don't need to know this up front. I'll teach you how to set this up. It's a very powerful way to trade. So once that goes live, the chart is going to reflect what are we going to see? Did we mark at or above 1202 the next day? Of course we did. This triggered the trade. We went live. We bought the contracts automatically. Triggered the trade. At this point, the entire trade is managed. I've got the stop loss, I've got the profit target. In this case, we hit the profit target. Okay, so this was on the 24th of January. So we track everything on as much detail as my clients want. They request new stuff all the time, then I'll add it. This is the closing ticket. So this was yesterday. Look at the date that this order was filled. January 24th at 9:31 in 1 second. We sold 2 contracts of lift, $10 strike at $6.05. This is the notes on the auto execution. Sell when lift marks at or above $15.96. This is the auto execution of the pending order. All done automatically. I didn't hit the button. It was driven right off of this setup. So the translation is done up front. So we take the underlying stock, find the breakout. This is an aggressive bullish breakout pattern, found using the very same method I showed you on the chart. Set up in advance, we catch it, and we're done. So this is done after the market closes. So today, in a couple hours, I'm going to run our various search filters, different strategies from aggressive bullish, conservative bullish. I'll look at the opposite side, aggressive bearish, conservative bearish. We'll look across other strategies if we don't get anything that sets up properly or is in a good position to buy or sell. I'll stretch the boundaries. We'll start looking at some of the other strategies. For me, once again, I mentioned why I do it this way is because it's there to manage my optimism. I like to be objective. Well, if I'm staring at my charts all day, I can stare at them long enough and I'll come up with 5 or 6 different reasons why I want to buy something. And if it's not fast, if it's not objective, then I'm just reaching. So I wanted to elevate my thinking and focus above the red and green lights that are flashing every day. So I wanted to trade with the least amount of noise. Well, that's when the market's closed. I want to take advantage of the highest volume trading periods of the market, which is the opening session. Okay, the opening bells where you get historically the largest price action throughout the day. So I want to take advantage of it. Well, how do I do that? Well, if I wait for the market to open and then I start trying to follow the movers, that's chasing. I'm going to get bad fills, bad entries. Most times I'm going to be too late. So I want to be there at the right time. And that's when that market opens up. Well, the way to do that is to be already prepared for it. Already have my trades waiting for that bell to ring. So that way, if I'm working or if I'm out with my kids, because I'm very engaged with them and it's on purpose. So my whole schedule is based around my children, all the different baseball events, cheer events, school events, family events that we have. I'm very much so engaged and around. So I built this in a manner where when they're at night and it's time for them to go to bed, I can start pulling up the charts, spend half an hour and be done. Only reason it takes me half an hour is because I have to then take my trades and then put them in, text message, put them in an email, then send them out to all of my traders, right? So there's extra time for me just to send them out. So when we talk about the transformation is number one, we're no longer over trading a handful of stock symbols. For those that put in these symbols, you probably traded them frequently because it's something that you trade, you may think well, which is fine, but ultimately you're missing out on a whole nother bucket of opportunity of breakout stocks that you just don't see because you don't have a method to go see them. Now with this method of trading, just the one checklist I gave you, you're able to now just look for where are the patterns, where are the stocks at the right pattern. It's a entire trading life change because now we're not searching for a reason to buy 3M or searching for a reason to buy Boeing or Intel or Bank of America or Tesla. We're going to use the objective side of it. When Tesla, it's going to happen. When Tesla gets above this 50-day and there's a volume move, I'm buying it. I'm not going to buy it now. I think it's going to go here, but it could. This is why the probability. It could come up off here and continue coming down again. This is where thinking, so my opinion is it's going to break it, but I don't know until it happens. So rather than be opinion based and be wrong, I want to visually confirm that the price has broken the 50-day. I also want to make sure that we have the volume supporting a bullish rally to happen. So wait a few days, you're going to have a higher success rate. But I don't have to just keep my eye on Tesla. It will show up in my results. It'll show up in my list. I don't have to keep watching it. It'll show up. So a lot of questions about results, which is 100% fair. So I'm going to talk about the program. I know there's lots of questions on this. Every time I host an event like this, I end up getting, there's so many questions and I love them. And I would spend another few hours with you if I could. As some of my traders have already mentioned, sounds like I'm losing my voice. There may be a bit of that happening. It's been open enrollment week, and we don't open these groups up that often. So when it happens, next thing you know, I'm doing, 10, 12, 15 hours of open enrollment events like today. At the end of it, at the end of this week, I'll be able to take a break and just focus on the Market Pro Life Club, which is good. I got a question. When did we start sending out these signals? So we started sending out these signals. It was actually based upon requests from my trading room. So I started with education first when I came back into the market. When I stepped down as a chief revenue officer, I came back in with education and a trading room. That's the products that I offered. But after a couple of years, I had people say, that we just kept getting the question, hey, what are you trading? What's in your hot list? And I said, well, would it be helpful if I send them out to you? And then everyone was like, yeah, it would be super helpful. So that was the birth of, the signal service side of my program. So now I just do it all together. So now it's education, it's live trading, and it's signals all in one. But that was based on the request of, my traders in my room. So let me explain this program. I know there's a lot of moments of aha moments that just took place, because I could tell when the comment section starts to blow up with comments and questions. The other question that's probably coming in your mind is it that simple? The answer is yes, it is that simple. Now, simple does not mean easy, because for most of you that have experience, you're gonna have to transition your mind into being open and not a closed mind. Okay, so I'm gonna assume that you have an open mind because you're here today, and you're not just going about your normal day doing what you normally do, right? So you're here with me, so there is a desire for change. Change is not easy. Okay, so once again, I'm gonna show you a simple way. How easy or difficult it is a lot. Is heavily, I guess, dependent upon, how open or closed your mind is. The beauty of this process, it's not gonna take you more than a week to figure this out. A week to say, wow, is Matt really living up to his simple and repeatable? It's going to take you about a week to answer that question. Doesn't take long at all. So if you think it's too simple, then I've done my job, because that's the ultimate goal. I want this to be able to be something that you can pull up if you want to trade all day long, or if you just want to trade a couple times throughout the week, or if you just want to follow my picks. It's going to be up to you. I encourage you to do both. Show up with me. I'll take you by the hand and we'll go through the markets, and I will change your entire perspective of how to analyze and how to forecast it. And then you're going to have an ability to follow along with my picks, so you can use it as a learning tool. There's nothing to download here. There's no expensive software. I've already talked about that. In the Rapid Profit Methods Plus. This is a plus. It's a combination of my Rapid Profit Method and Options Profit Generator program. Some of you already have both. My active clients, which is perfect. So you're good to go. If you have one of these and not both of these, let us know. We'll get you an upgrade. You can just simply add on the other side to it. Okay. If you're not involved in either one of those, then you have an exclusive opportunity to get them both all at one time, and that's what this is today. This is what you're going to need to trade. Every trade, you need to know what you're going to trade, what direction, where you're getting in, how you're getting out. Same thing on options. Since August 2020, when I started sending out signals, this is once again the birth of requests that were made from my traders started in August, though I've been hosting a live room for the last 5+ years. It's more than that now, but this is as it was over the last couple of days, was 2,980% net profits. Net profit percentage is I think the most accurate way to reflect the track record. That's a sum of winners and losers on a profit basis. It does not include your investment size, right? Some marketing companies love to show, oh, we made $4,000 in a trade, but they fail to mention that included the $1,000, $2,000 to get into the trade. They just show you a total closed trade amount, which includes the investment, right? What you put into the trade to start with. That's not what this is. This is pure winners, losers added together, comes out to 2,980%. If you trade, and this is the assumption, the return, the way you calculate it, is you take your average investment size. Let's say it's $3,000 a trade. Yeah, GoToWebinar's been acting up, so the screen's been freezing on me on and off. Is the screen up now? It's just my track record. So ultimately, you take the percentage, which is 2,980, okay? It's really 29.8. Move the decimal over. It's a factor. It's highly important. It's extremely important that when you trade, you have an average investment size per trade. If you trade $1,000 a trade, you need to stick to $1,000 a trade. If you're trading $500 a trade, you need to stick to 500. If you have 5,000 a trade, stick to 5,000. Don't be an all or nothing trader. An all or nothing trader is one where you have erratic investments. So let's talk about, you have 3 trades, okay? 3 trades. One of them, you invest $5,000. The other 2, you invest $500. You may win 2 of the 3, but if you lose the one trade that you had 5,000 in, your losses are more than likely going to wipe out any gains across the other $500 trades. It's Murphy's Law. That's one of the lessons early on, is set a standardized average investment. You're not going to be able to do it to the penny, but you need to have a plus or minus range of 1 to 2% between your investment size. So that means if I'm going to buy Bank of America, I'm going to buy an option following a signal I send, let's say, right? If my average investment size is $1,000, then I'm going to make sure I buy the contract size that's going to be close to that $1,000. So I have as close to equal investments per trade. The reason that's important is so I don't become all or nothing. I don't want to run into a scenario where one losing trade, I can go 9 out of 10, right? This is an extreme, but I have seen this personally happen to traders. You'll have a 90% winning percentage, but your one losing trade wipes out all of your losers. So you have a very high winning track record, but you have no money. So it's better to have a smaller average investment size and live to fight as the markets go against you and as you make money. Then when you hit a certain threshold, you increase that average investment size, but you do it in a standardized way. If there's one money management strategy that you walk away with today, that should be the one. If you're not doing it, that should be the one. So if in this example, you trade an average investment size of $3,000 with my trades, that's $90,000 in profits. Okay, so it's a way to show how to associate this percentage. Now, like I said, it's gone up since the last time I posted this last week, of course, because we always have open signals all the time. So we have trades that open and close all the time. I'll show you more details of the track record. If you have questions, I have it all summarized together in one. We've got a lot of questions about that. As I showed you earlier with the Lyft trade that just hit it was 105% profit, FYI. So Lyft was 105% profit in 2 weeks. So if you put in $1,000 in that trade with me 2 weeks ago, you made $1,000 in profits. Okay, so you got your 1,000 back in the trade plus 1,000. Okay, that's how profit works. You made $1,000 on it. It's to double your money. Okay, anytime 100%, whatever you put into it, you just made that equal in profit. So the full details are laid out. So you have text message, you have email, full details, and then you have links to go to the online trade tracker. That's where I showed you the lift ticket. Now you can do both here, but like I said, we combined education, live trading room, and signals all in one. So you get my picks. I teach you how to do it every single week. We analyze, we forecast the markets live twice a week, 4 hours a week in total. And then I have educational video content, reading material for strategies, checklists, money management, options trading, and training, all inclusive of this program. So I appreciate if you can at least spend a few hours a week with me. That will really dramatically increase your success rate with us. Now, remember, I came from a long and far levels of experience working through a large $150 million plus company, and we had a guarantee policy that was a mile long. I mean, it was full of fine print, and it was a nightmare to support. Many of you probably have experienced it. You know, you hear of a guarantee, you call the company, say, look, it's not for me, I'd like my money back. And then they hit you with the, oh, well, when you signed up, you have this whole, you agreed to do these a million things to qualify to get your money back. It looks like you have to spend 75 hours with us to get your money back. It's frustrating. If you haven't lived through that, you can imagine how frustrating that is. Well, once again, I didn't want to do the same things I've done before or my companies did before. So we keep it simple. We have a guarantee because some people need this just to have a level of comfort. So we have it, but it's simple. It's just 30 days. There's no criteria. There's no steps to complete. We don't have a sales team. No one's going to call you and badger you to stay with us. We don't have a marketing budget where we spend, you know, tens of thousands of dollars a month on getting leads and getting traffic. We don't do that. We work with partners like Investorexpo. All we ask is that if it's not for you and you want your money back, just tell us within the first month. I know that you'll know full well if it's for you or not in the first week. Doesn't take long. It's either an objective statement, yes, I understand it, yes, I see value, or no, I don't. In a week, you'll see 5 to 10 signals. You'll see 4 hours of live trading in my trading room. So, I mean, plenty of time to really evaluate. But you have another 23 days to take us through your paces, whatever your criteria is. So we do have this as a level of comfort. Remember, it doesn't matter if it's red days, green days. We're looking at breakout opportunities in a pattern-driven way. Return on investment. So if I told you 2.5 years ago that if you spent $1,000 on getting these signals, and let's say it's $500 a year, right? So that's $500 times 2, that's $1,000. That you would have been able to profit at an average investment size of $3,000 of over $90,000. Would you say that $1,000 was worth the investment? Of course you would, right? Of course you would. Who wouldn't? I just say that so you have the mindset of, if we can have a lower threshold of an investment. Remember, I have tactfully and intentionally created this program to ensure that we can have the least amount of overhead as a business. Lower overhead, lower cost to run the business. That means we can pass on the lowest savings to you. So what you're gonna receive is the signal services. So all the emails, trades that go out Sunday night, Monday night, Tuesday night, Wednesday night, Thursday night. So you have 12 to 14 hours to follow my picks. Full details SMS, also access to our fully detailed cloud tracker. This is the URL I want you to write down. It's Rapid Profit Method Plus. So Rapid Profits Method Plus. It's exactly right here on the title.com. Don't go there yet. I have a special in store for you. We're in our open enrollment period and it ends in 2 days. Okay, so I want to make sure if you want to get started, I'm going to give you the best opportunity to do so today. You're going to receive the signals. You're also going to receive 4 special bonuses. First bonus is access to my live trading rooms. Second bonus is my empowerment toolbox. These are all of my checklists, all of our videos on autopilot, money management training. I've got course content on how to identify trends, momentum, how to read option chains, and more in this toolbox. I want to give you access to that for the next 12 months. I want to give you our Options Mastery Academy for beginners, intermediate, advanced options traders. There is a evolution to you found in this program. I want to make sure you know exactly how we're going to leverage the options world, so I'm going to include this bonus as well. And then, of course, we have already talked about one special and very important technique of money management. I want to make sure you've got money management tools such as calculators and different checklists around money management, so you know when to scale and when to scale down. So as we look to options, I want you to be able to read the option chains. I'm showing you the most straightforward way today. You'll love the Market Pro live sessions, my live session, because we'll go through various strategies depending upon what the conditions of the market are. So we're going to get you the quick start options training. You're also going to have the autopilot lessons. So how to set up those pending entries, the OCO order brackets, both option trades as well as stock trades. You're going to have all of my checklists. These are the top 4 checklists that we use. And there's an additional 4, actually 6. There's 6 more in the empowerment toolbox. But they all use the same strategy of moving averages. Money management, we've already talked about how important that is. I want to make sure you have access to those money management tools. I want you to write down the days. Mondays at 7 p.m. Eastern time, Thursdays at 12 p.m. Eastern time. Those are our 2 weekly Market Pro live sessions. Every 2.5 days, we have a session. This is your live forecast. Okay, so you know what to expect. So all of the movements that we see in the large, broader market with the S&P 500, the Russell 2000, the diamonds, and the NASDAQ, we already have that plan in place. We've already anticipated all of these moves that you've seen. Some of you may be shocked, some of you may be excited. We are even keeled and balanced because we've already talked about this. So we already have the expectations that you're experiencing now. We already had the expectation. That's what's found here. These sessions are live, so we go through live trades. We'll go through how to leverage the current conditions to find profits. And to keep it simple, what we talked about today, yesterday, we weren't talking about 3 months ago because the conditions of the market change. So this is a huge bonus, and my favorite piece of this program is the live training and live support. If you like reading content like I do, I'm going to give you these 3 special bonus reports. 39 investing secrets of the Titan value investors of our day. This is how to identify value investments. This is based upon a collaboration from the top hedge fund traders out there, the Warren Buffetts, the Carl Icahns, Bill Ackmans, and many more. The Titan Value Investors 100X rule. That is a specific focus of how to find the next Tesla. That's what this workbook uncovers. And then another amazing profit calculator built upon the backs of some of the top hedge fund traders out there. So another special bonus. So everything here you add up, there's over $14,000 in products. This is not a value we picked out of a hat. Those are a total sum based upon the individual sale of each one of those programs, because we've done them all individually. That's what it totals. But once again, I've discussed this, and I'm going to say it again here. We have strategically managed and created a lean, low overhead company where we focus all of our attention on live trading and training events in our Market Pro Live Club, plus a focus of using technology to help support through our customer support business lines. We do not have a sales team. That is expensive. We eliminate a sales team. We don't have a marketing budget. We partner with groups to alleviate that overhead. What that gives us is the best price you'll ever see for any program close to this. You'll receive everything I walked you through today, including all the bonuses for the next 12 months for just $798. Daily signals, multiple signals in a day, 2, 3 a day. All of the live sessions, all of the tools in the toolbox, access to everything for just $798. You've got the 30-day guarantee if you need it. Once again, though, I want to test how many in the room know how to pull the trigger. It's very important in trading to be able to pull the trigger. So for those that sign up now, I've got 10 coupons that can save you $200. So that would bring down your $798, which is phenomenal, down to $598 for the entire next 12 months, all paid. One-time fee. There's no hidden costs. There's no hidden subscription charges here. It's one fee, $598, for 12 months access to all of the signals, all of the bonuses, all for one price, $598. So now go to rapidprofitsmethodplus.com. When you go and type in that URL, it's going to redirect you over to a checkout page. It's a custom page for this event today. So don't be caught off guard when the page redirects. I'll show you what it looks like here. I've got Alan Anna, thank you, Anna. Anna just dropped in the link for today. This is what it's going to look like. This is where you know you're in the right spot. You can read more about the history of the program if you like. If you want to lock in that first 10, they're going to go fast. Click here to enroll. You'll see the add to cart button down here. I want to show you where the coupon code is. So once you do that, you're going to see we're now on the secure checkout page. It says connection is secure. Your information, for example, passwords or credit card numbers, is private when it is sent to the site. Okay, so all the security measures are there. The program details are here. Your additional bonuses are here. Okay, so just simple contact info so we can create your membership area. Obviously, billing information. You got your coupon code. Type in MATT200 and apply the coupon code. Let me see if I got it. I'm going to show you the track record. Yeah. All right, so let's see, do we have Kim here too? Yeah, so we've got moderating group here. We've got Kim also dropping in. Kim, can you check the coupon for me too? I want to make sure you got the coupon. I want people to miss out. I hope we didn't just go through all the coupons. That would have been really fast. All right, Aggie. Yeah, hopefully it's not because they're out. So we may have to open up more of the coupons because I tried to. I may have missed the. Yeah, isn't that amazing? I missed the coupon. All right, so good question. So while, yeah, Kim, at this point, let's open up the coupon code. We hit the 10, looks like. If you can do me a favor, it may take a few minutes, but open up the coupon and set it to expire at 3 o'clock. Okay, coupon code. Oh, did I put it in wrong? Oh, okay, I must have put it in wrong then. All right, so let me fix it. Okay, got it. RPM. Okay. All right, so let's do this. Okay, so we opened up more of the coupon, but we got to use this coupon code. So it's RPM. I just tested it and it worked. Wow, that was really fast. Okay, so RPM 200, got it. All right, so let's use this one. MAT 200 is sold out. Let's use RPM 200. That'll work for us. Okay, thank you, Kim. I appreciate it. So go here on the coupon code, type in RPM. That's for rapid profit method, of course. RPM, and then type in 200, and then hit apply. Then it'll say coupon applied successfully to your order. Yeah, some of you must have jumped ahead. I love it. Yeah, that's really fast. That's good. Or you saw my event earlier this month. All right, good. I love it. All right, so RPM 200, and then you'll see it drop it from 798 down to 598. Okay, so that's how you'll know. Just make sure it says coupon applied successfully to your order. And if you made a mistake and you forgot to apply it, let us know and we'll get you rectified. Okay, we'll get you taken care of. So I've got a great question here from Elaine. He goes, how many actual trades per week? So this is the entire track record. I've put it all into one so you can see it easier. So this is the current list of positions. Okay, so currently we have 11 open positions. There's 11 open. There's 289 closed positions. The number here, you'll have access to these trackers. Okay, so you'll have access to these when you sign up. 289 closed, and then we have 44 missed. Missed means they did not hit the entry. Okay, so we send a signal out, but they only go live, or they only count, right, if they hit the entry. So they trigger. So there's 44 missed triggers. Full details of all these signals. Okay, so you have everything listed out. The example I showed about $3,000 is not the minimum you need. It's not the maximum you need. That's just a number we use for example purposes. What you're going to see is the average investment size. Okay, this is where 11 may sound like a lot. It may or may not be. Everyone's different. The average contracts of the open positions, the cost is $3.23. That's the premium, $3.23. So times that by 100, one contract, the average is $323. That's the open trades. Of the closed trades, there's almost 300 of them. The average is $2.25. So that's what you base your number of trades, or how much your average investment size is going to be, is based on what you can trade, right? So because of the frequency, it's always best to have a consistent and average investment size. Now, every week you'll see stocks fall off, like Lyft came off the open and fell down the close, but then we have a new signal that shows up, right? So how much you can follow along is obviously based upon how much money you have. So everyone's going to be different. So we came together as a group and said, okay, what's the best way to do this? I can't know what everyone's trading, nor do I want to know. I don't want that information. Okay. So my job is to find the breakouts. I post the breakouts. Then I teach you how to manage equity. At some point, if you don't have the equity, you can't trade it, right? You want to have minimums, you want to have maximum thresholds, which you'll learn in the money management side of this process. Average hold time is 20 days. The last time I ran the numbers, 20 days. Entry to exit. Some last days, some last a few weeks, right? Some can go 4 weeks, some can go 5 weeks. but that's why we buy enough time. But for holding purposes, we have stop losses, so we limit loss. We don't hold trades, that continuously lose. We're going to get out at key prices. So if we lose, what we do is we actually just open up the equity of that trade sitting there in a, say we lose 30%. Well, I have 70% of that trade to trade the next trade. So we want to have fluidity in the account. So that's why we have very strict stop loss rules that we use, because if we're in a negative position and it's in a flat position, then we're just letting money sit. So that's why we use very specific orders, so we can get out at a profit, get out at a stop, and move on to the next one, right? So everyone's gonna be different on what they can hold and how many they trade per contract. That's the uniqueness of it, of course. Now, these are different. So cash attractors are weekly stock picks, weekly. These are all daily charts, and these are options. Now, you don't have to trade the option either. Even though I give you the option trade, you can trade the stock. You have the entry, you have the profit target, you have the stop loss. So I've got traders that will just trade the stock. They won't even buy and sell the option. They'll just take the data and just trade the stock with it. But that's up to you. Obviously, there's a comfort level. And here's the reality too. If you're unfamiliar with trading options, or maybe you're in that period of trading, and it happens to a lot of us, where you have a fear of pulling the trigger, of buying or selling or being in the market. It happens. More than likely, that fear is fueling your indecision. We've all been there. If you've been in the market more than a few months, you've felt that. I felt it. If that is you, if that's your feeling now, I can fully appreciate it. And everyone in the room that has gone through that knows perfectly well how you feel. In my experience, the best way to overcome that fear is understanding expectation and knowledge, right? Knowledge and expectation. So you don't need to have a live account to gain the confidence and to learn how to expect market move. Start with a demo account. Every broker has a demo account, and if they don't have, it's like a practice account. If they don't have one, then I'd get a new broker. I mean, simple as that. If they don't have one, get a new broker. So you can get the confidence of following trades without the risk of loss, right? Without the risk of losing real money. So at the bare minimum, you're at least learning the process of executing, because for many of you, the way I set up the trades is different than how you set them up. You may have done pieces of it. You may have done a contingent order. You may have done a pending order before, but you probably haven't done all three in one ticket, right? So there's gonna be a level of uncomfort. Well, get a demo account and just practice a few trades just to make sure that you set them up properly. I give you screenshots so you see how I set it, so you can basically match them. Go line by line and make sure, okay, Matt says this, does mine say that? Matt says this, does this say that? Okay. And then see how it actually plays out in your practice account. As you show up to my live sessions every single week, I can assure you, you'll start to see exactly what and how we look at the market. It won't take you long. It does not take weeks. It takes days. If you show up to 2 consecutive Market Pro Live Club sessions with me, it could be Monday, Thursday, it could be Thursday, Monday, whatever order. My next live Market Pro Live Club session is tomorrow at high noon. We're going to recap what we talked about Monday night on Thursday at noon. You're going to see how closely aligned our forecast was on Monday night. Then I'll give a forecast of what to expect the last half of Thursday, Friday, and then Monday. Then we're back Monday night, because remember, we're talking about daily charts. We're after the market close. So it's a less anxious trading environment. We're staying above the noise. If you like to be more active, then be more active. for all my active day, pattern day traders here. I've got traders that take our analysis, take our tools, and they trade, multi-leg options. They'll trade their straddles or strangles, bull put spreads, all that fun stuff using the same base approach we do. So that's the beauty of the base template that we use, is that it can be leveraged in multitude of different ways. From an entry standpoint, we're looking at where those breaks occur, where those flips of directions happen, making sure that we have a confirmed volume play in our direction. So it's a very simple concept, but powerful because it repeats itself over and over and over again. I'll talk about which ones to take, how to identify resistance, support, when to anticipate the end of a trend, all using the same base approach. But the first step is to sign up, take that action. If it doesn't work, it doesn't work. I don't, have any expectation or any lack of reality to know that I can't help everyone, though I want to, right? It just can't please everyone, and I can't help everyone no matter how much I want to. So that's why we have that buffer return policy. So at the minimum, your challenge is to have courage, and the courage is, look, I appreciate what Matt said. I appreciate his learning style. I learned more than I thought I could learn in just this event today. Let's give him a shot. If it doesn't work, like I said, we get your money back. But I can't do it for free, though I'd love to, right? Maybe one day. But right now I've got to, make sure that there is an investment. If things are free, most people don't really use them. It's another psychological accountability that takes place. I'm going to show you a ton of free resources that are going to help your analysis and your research through our sessions together. You'll see so many free resources. But a lot of the concepts individually are found online, but I have a unique way of putting it together for you, right? And so take that step. I'm very confident that we'll figure it out if it's for you or not very quickly. It won't take us months to learn if we can help you, if we can help you. It doesn't take that long. But I will say this, we're at the closest point that we've been in a long time since 2021 of being in a recovery bullish pattern. So forget what you hear analyst-wise. We look at the charts. We look at objective data points. We are the closest we've been in a very long time. And when that move happens, it's going to move, and it's going to move fast. So, and if it doesn't, if we need more time, I will tell you that, and we're going to trade with what the market gives us. But this is the most optimistic there's been for a bullish rally, more than just a few bars. Okay, so, but at this point, you can probably tell my voice is on a downtrend, and I need to give it a nice break over the next couple hours. So I'll be back with you live tomorrow at high noon. You're going to receive your invoice, your welcome emails, your 2 logins for the trade tracker sites. You'll be registered automatically in about 20 minutes or so for the Market Pro Live Club sessions. You'll have a link to download all of the bonuses that you signed up for. If there's any questions, I've got the support up in front of us. So you have the support information, the support email, a support phone number as well. So everything is listed there for you. Write it down, shoot us a text if you like, whatever your preferred method is. We'll be with you. Thanks, Rob. Appreciate it, buddy. That's a great comment. I'm going to share that to the room. Yeah, appreciate that. Appreciate it, Robert. Aggie, you need the upgrade price. You're already, if you're in the options profit generator, all you need is sign up on the rapid profit method. You don't need this one. I'll send you the upgrade. Yeah, you don't need this one. Yeah, appreciate that, Robert. Always a pleasure, buddy. Yeah, Aggie. So let's see. Uh, Kim, do you have the a rapid profit method link by itself that we can send to Aggie? He already has the options profit generator. We just need to add on the rapid profit method. I don't have one handy, but I could probably find one. All right, perfect. Thanks, Alan. Okay, cool. Kim has it. All right, Aggie's got it coming. It'll be coming right to you, Aggie. Appreciate it. Let's see. All right, Douglas. Let's see. Alan, Douglas seems to be stuck on processing, so we can look at that. All right, perfect. So I've got Alan and Kim here. They're going to keep moderating this chat box. I'm going to be stepping away, but I will leave the room open. So if there's any questions, I mean, Alan's my business partner, so he does an awesome job. Kim's an amazing member of our team. But you know, you can just tell we're owner operators. We like to have fun. We like to be here with you all, shoulder to shoulder, and that's how we're able to keep costs low. I mean, that's where this. That, I mean, it's just that we're any business, right? The higher overhead, the higher the cost. So we lower overhead so we can lower the price. Very simple, simple economics. So we're very active, hands-on, and that's on purpose. So we can have fun. You know, this is not a big. You know, you just imagine we have. You know, I think we're over 500. Yeah, I think we're pushing 500 active clients with us now. So, you know, it's not a multi-million-dollar business. That's fine. For me in my stage of my life, I like to enjoy what I do. I like to enjoy the people I work with more than my younger days when I was just chasing the next dollar. So we have a lot of fun, and ultimately we have the same common goals. We're trying to be successful, and we're trying to do it in a manner that is simple, and we're part of a group. You know, the room is the Market Pro Live Club session has grown so much. We have so much insights and analysis that not only I bring, but those in the room bring to help answer any questions that you know I may not know. They have answers, and we're able to work together as a group. So it's a fun environment. But you'll see that Thursday, and then we'll be back again Monday night. So then the cycle repeats itself. So looking forward to have you all. I know there's always a level of uncertainty when you work with someone new, but I can assure you we will do our very best to earn your business the old-fashioned way, and that's by proving it to you. And if we can't work with you, there's no reason to have a nasty breakup or to do nothing but part as friends. Okay, so if it doesn't work, don't worry. Just let us know. We won't badger you to try to keep you to stay or anything crazy like that. Let's just do it in a way that we can always part as friends. And to me, it just makes it a more enjoyable experience for everyone. So appreciate you all. Happy trading, and I'll be back with you live in our next class, which will be Thursday at high noon, which is included with the Market Pro Live Club. So thank you all.